Ladies and gentlemen, good day and welcome to Jyoti CNC Automation Limited Q4 FY2024 earnings conference call hosted by Equirus Securities. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Patel from Equirus Securities. Thank you and over to you, Mr. Harshit.
Hi, good afternoon everyone. Today we have with us Mr. Parakram Singh Jadeja, Chairman and Managing Director of Jyoti CNC Automation, and Ms. Shivangi Lakhani, who is Executive Head, Strategy and Corporate Communication. I would request Mr. Jadeja to give your brief opening remarks, how the fourth quarter went by and what is your future outlook on the industry as well as on the company. Over to you, Jadeja, sir.
Good afternoon, friends. I am deeply honored and delighted to extend a warm welcome to each one of you to have chosen to invest in Jyoti CNC. Thank you for the level of trust and confidence you have placed in us. Your decision to join us as an investor has boosted our confidence to another level. I want to assure you that we are fully committed to maximizing the value of our shareholders. We truly understand and responsibility that comes with your investment, and we promise to deliver the best of us. With your support and backing, we are confident to achieve even greater heights in the days to come. I would like to take this opportunity to express my heartfelt gratitude to each of you for your belief in your company's potential. Welcome to the Jyoti family. Thank you. I will take you all with this now the company presentation. Let's say in quarter 4, the Jyoti has clocked a revenue, let's say quarter 4 from quarter 3 to quarter 4 is close to a 19% revenue has been jumped and EBITDA margin has grown up by 39% there. And the PAT level, we have increased close to 108% over here from quarter 3 to quarter 4. This is truly is able to possible due to our export has went up to 42% and our outside, let's say the Indian operation has done it at close to 58%. In terms of this revenue mix, in this quarter, the aerospace and defense has contributed as close to 41% with the leading of this quarter. Next to be a auto and auto components by 25%. General engineering is an 18%. Dies and molds by 7%. And the new upcoming industries are going to contribute by EMS. It is at 3% over here. In terms of a consolidated financial performance, let's say year on year. So year on year, our revenue from the operations has jumped from 929 to 1338, so close to 44%. And in terms of the EBITDA percentage has grown up, let's say, is reached from 8.3% to 22.5%. And I'm very happy and delighted to tell you that this year is completely turnaround year and we are now walking to a profitability path. It's the last year we were having a close to 5 crore of losses, and this year our PAT has reached to close to 151 crores. And this is all due to this, even though we have a very robust order book we have seen over here. And in this quarter, we have booked close to a 635 crores of new orders. Out of that, close to a 21% in new orders has come from the aerospace and defense, and 29% we have received from the general engineering. That's this quarter order book after the dispatch The closing order book has reached to 3,438 crores of a total order book over here for the opening of this year. And out of that, close to 51%, and that 51% is close to, let's say, 1,761 crores of the order book. We have a very strong order book to aerospace and defense, 526 in auto and auto components, 253 is on from the EMS, and 522. So this total together is close to 3,438. With this opening order book, we are entering in this financial year 25. I would like to tell you something more, in terms of a company over here. In a company profile, we are having a mission of propelling technology and prospering life. Meaning of that, we are going to be, these are the main drivers for us to, what is the life? Comfort to a human life through the technology, happiness for all the stakeholders, innovation at the core, economical and cultural contributions, patronizing technological education, and most preferred organization to work. This is our total mission path to be there. And in this journey, I would like to brief you because many people have been joined new here. Let's say Jyoti has been inception has started in 1989. And we have now a subsidiary companies in France, Germany, Canada, and Turkey. In plant has and capabilities is, close to 253,822 square meters. And we have a completely vertical integrated manufacturing facility, 2 plants at Rajkot and 1 plant in Strasbourg, France. We have more than 200 product variants and more than 130,000 machines is on a field today. In this journey, we have many milestones has been received. Let's say by 2007, the first time we have acquired this Huron Grafenstaden. 2008, we have inaugurated our own R&D center. 2016, we have made a 5-axis machine, the multitasking development with this Government of India and IIT Chennai together. And then this journey, 2017, we have developed a very special Industry 4.0 tool called the 7 Sense, and many AI-based applications we did in 2019. And we realized that in 2022 is coming for the more and more EV vehicles. Many of the products we have developed on for the electric vehicle over there. And this year, 2024, as a remarkable year for the Jyoti that, and we have a consolidated order book is close to more than 3,400 crore, and company has listed on a 16th January in 2024. We have a very completely a nice, about our team. We are 3 directors and 3 other our independent directors are Mr. Vijay Paranjpe is from the ex-Siemens board member. Mr. Yogesh Katrecha was an IITian, and Ms. Chignasa is basically an academician, and the financial person from Mr. Dorakia. These are our board member apart from my 2 brothers over here. And we have a very solid and long, management team, those who have started this career with me and to working with me. The Kamlesh is our CFO, and Gandhi, Vijay, Hitesh, and these all are the team members are working with the Jyoti since last 20 years with us now here. We are, a completely vertically integrated manufacturing facility. We have our own foundry. We have our own machining shop. We have our own sheet metal shop. We are integrated with the paint shop. We have a world-class assembly, sub-assembly, and manufacturing it. Same assembly facilities are having at the France. Our key strength into the R&D capabilities there. In R&D, we have more than 140 employees or designers. Those are dedicated to do day in, day out to develop a new product over here. In this last 25 years of journey, we have developed more than 200 plus product variants and across 44 product vertical over there. In terms of a capacity, this plant is constructed a phase manner. In a phase 1, last year in my last speech, I already talked to all the people that we have a 4,400 machine capacity. That is now in an enhancement stage. and it is going to be, the construction has already started. One assembly building is ready, already come to production from this month, and other facilities are on the way. And end of this second quarter, the complete plant facility will reach to 6,000 machines per annum over here with all the model mix over here. Even in Huron, we are extending our new assembly. This assembly also is going to be coming within a September time. That whatever our order books are there, to execute this order book, we need this capacity to enhance, and we already started this activity and will fulfill this our activity to be before this second quarter to be there. I would like to tell you something more about our technological backbone as a Huron. Huron is a technological, is a strategic location, is a part of a central of Europe. Europe is close to 25 to 30% of a global machine tool consumptions are there, and all world key manufacturers are located to be there. All the technology, you can say the Makkah and Medina of the world machine tools are central part of Europe, and Huron has been there. And since Huron has completed more than 190 plus years over here back. We have a very well market reach into Europe. We have a very good product basket on a 5-axis machine to broaden to the aerospace and defense to be there. And Huron is carrying a lot of our brand values, and the great customer base has been given to us over there. And we have a nice technology access about from the European areas to be there. In terms of Indian, our sales and distribution, I would like to tell you a small brief about that. We have 29 sales and service centers across the 12 states in India. We have a 2 distributor dealer in India and around 11 distributor dealer outside India to be there. And across this globe there we have a presence. And now in the next coming year, we are looking to be entering, that is in our growth plot, we are looking to be entered into US zone to be more to be there. In terms of end user industry segments, we are largely being served by the defense, aerospace, electronics, automobile, railways. Railway is another upcoming industry. We are working very closely to those kind of customers. Die and mold, infrastructure, oil and gas, and healthcare. This is also another area that we are looking into be that, and the pumps and valves, power, bearings. And in terms of our product basket, we are, let's say we have divided in terms of strategically is 3 areas. We called as an entry-level product, second called as a mid-level machine, and third called as a high-level machine. Entry-level product, we consider this machine turning and milling and turn mill. All these category up to 50 lakhs we classified as an entry-level product. Up to 50 lakhs, so let's say from 50 lakhs to 2 crores, we have identified as a mid-level product, and about 2 crores to 20-25 crores, the machines were considered to be the high-value machines like that. We serve one of the most, let's say, prestigious client base. We have it in aerospace and defense. In India, if you look at that, the HAL and ISRO are our client. Tata and Tata, all the Tata Boeing and Tata Airbus and everybody, the new Tata Electronics and everybody are our customers. Internationally, we have this Airbus, Boeing, Dassault, Safran, GE, Turkish Airlines, Avic, Sikorsky. In India, we have a Bharat Forge, the BrahMos, and Tata Advanced Systems. Even one of the marquee customers, we have one of the missile manufacturing systems from France called the MBDA. These are the key clients on aerospace and defense to be there. In all other area in automobile, we have this Tata Motors, Mahindra, BMW, Audi, Volkswagen, and Daimler, and Fiat. And in India, we have Ashok Leyland also is one of our customers over here. In other client also, we have a Bosch, Rexroth, Havells, this L&T. We have more than 12,000 customers are like that. So if I keep the list, this list is very high basically. In this journey, we have recognized of many different awards. The best brand of a metal cutting award consecutive by a 6th time, and we have our association has most let's say We got it the Best Export Performance Award in 2024 in the machine tools category in India, and many other this kind of things like that. If I talk about the road ahead over here, let's say this market globally is close to $80 billion, and China is the number one consumer, is close to 34.5%. US is next, is 12.7%. Italy is 7.2%. Germany is close to 7%. Japan is 5%. India has 3.3%. And that's why India is fastest growing, and we are looking to be growing forward from here. Is close to a 20% year-on-year consumption is going to be in India also to be there. I would like to tell you more about the structural, how the Jyoti going ahead. Based on our mission, propelling technology and prospering life. This is the nose of the aircraft and the entire structure of the aircraft. We feel it like a strong management team, a world-class manufacturing process in the systems, a wide product basket, the strong R&D capabilities, the large installation base, and the global footprint. And number four, the key growth engine that what we have it. The number one engine is to be automobile and general engineering. Number two is aerospace and defense. Number three, we are looking to be a very robust, this growth driver is from EMS. And fourth is, let's say we are looking to be within the next 2-3 years, another product baskets and industries we are going to join. Our R&D teams are working to develop the many machines on the semiconductor industry. And the tailwind, today in India, there is a good tailwind in terms of the manufacturing growth, and even in the worldwide, all the defense spendings are globally is going to be increasing basically. So with this, I would like to tell you, today we have the number one, the growth engine is aerospace and defense. The globally aerospace and defense market size is close to $1.3 trillion and is going to be grow 8.2% CAGR up to 2030. And this is the numbers are from the all is rapidly increasing because of the geopolitical circumstances to be there. In EMS, everybody knows that in India, that iPhone has exported from India during FY24 has reached all-time high by close to $15 billion, and they will grow furthermore over there. So many of EMS players are coming over here, and that's why this EMS business is the second growth driver to be there. In this area, we have a strong input has come from our customers, and they are in the next 3 to 5 years, they require more than 1 lakh CNC machines, particularly for the EMS sectors to be there over here. That's the total these two growth engines we are looking. Further, this electric vehicles is going to grow in the next 7 to 8 years, and we have many products to substitute to them and to support to them basically. Semiconductor is an upcoming industry for us. Already we are developing many high precision stages to support to that industries, and a very near future we will update you more insights over here to all of you out here. And in terms of our next action plan, right now we are working more and more towards to a people development, because today the way the growth we are anticipating and the way we have our order book with us, and that all we are committed to deliver within a 1.5 year. So we need the people, and people is a backbone for the entire. The skill of the people is a very important parameter over here. So recently, last month, we have designed and developed our Center of Excellence to quickly ramp up the skill of the people over here, to support to this growth to be executed very properly to be there. In terms of a product development, R&D is our key strength. In the last year, we have developed the 3 more product baskets. One of the product baskets we call as a 5-axis U5 model is going to be supports to be aerospace, defense, and the oil and gas industries to be there. One more machines we have developed for a 5-axis machine for EMS industries, especially for the EMS as well as the healthcare industries. This is a large industries is going to be attracted to be there. And the third product we have developed is called as a fully automatic robotic systems on a production, manufacturing over. India is also entering on a large production cycle to be there. So these machines are being fully integrated with the automations over here. In terms of a market expansion, we are working closely and more rapidly to increasing our market share in Germany, France, Italy over there, as well as this year our focus area has been started in marketing activity. Even we are going to participate into US exhibitions to be there, because US is the second largest market there. China, we are fully addressed with this our Huron from the subsidiary there, and we have a very good business in China. China is the number one consumer in the machine tools basically there. Even I would like to tell you a little bit more about the capacity expansion. Already I have briefed you there. We have started way back in last quarter, and one of our assembly building is completely finished, and the new construction is going on in our machine shop and 2 sub-assemblies over there. Our foundry expansion is almost over now, and with this, our full capacity will be reach out from 4,400 machine to 6,000 machine by end of this second quarter to be there. And that's it. And now let's say I'm completing my presentation. If anyone has any questions, we can go through the question and answer session to be there.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good evening, sir, and congratulations on a very good quarter and a fiscal. Sir,
Thank you, Mohit.
My first question is, how do you see the new EMS orders contribution in FY25 revenues? I see there is no EMS order inflow in FY24.
Mohit, basically in FY24, we have already having a 260 crores as worth of orders we have received. And then after we were having the first batch of machines to be supplied, and they were supposed to test it over there. They have tested over there. The testings and everything has been, first batch has been completed. And in terms of the order book, we have not put over here before the execution, let's say, schedule has been not received, but we have a confirm return orders with us, another 550 crores from the EMS. It is in line with that basically. That will fall down in the next coming couple of weeks towards here.
Understood, sir. And so my second question is on the defense contribution. I think we had an order book of 20 billion from defense at the beginning of FY24. I think there was a 5 billion contribution in FY24. How do you see this defense contribution ramping up in FY25 for the full fiscal?
So in defense, let's say, this year we are anticipating close to another, based on the pipe, what we have. The biggest pipe we have right now, even in India also that. Even last call I mentioned that. And with the HL and many people are come forward to buying more machines and all Indian defense. We are expecting close to 1,000 crores worth of orders in the next 1 to 2 quarters over here there. And the end of the year, we are looking to be another 1,500 to 2,000 crores worth of orders, new orders we are expecting in this year from the defense and aerospace sectors to be there.
So my question was on the revenue side, sir. How do you see the defense revenues going up in FY25?
So FY25, we are looking to be execution side. We are looking to be close to 1,000 crores will be from the aerospace and defense. That's our commitment to deliver to our customers to be there.
My last question, if you can talk about Huron's entry into Indian defense and aerospace. what is the progress? How do you see this Huron's entry multiplying into orders for you?
Beg your pardon, what you are asking?
My question was on the Hurons. I think one of the slides you mentioned that Huron is trying to make an entry into Indian defense and aerospace segment, right? So it's trying to how can you just tell us about, give you some color and the progress on the Huron's entry?
Yeah, so all these, what are the products I talked to about the Indian defense and all, about the HAL, about the ISRO, as well as Tata Advanced Systems, and now the GE is one of the biggest customers has come to India over here. Okay, so these are all our Huron clients, and many more engine manufacturers are sitting over here. So Huron is going to get a better entry of this all the customers over here in Indian defense industry. Yeah.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you, Mohit.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah. How are you? Just one question on the part of EMS. So if you see quarter on quarter, our order book has dipped by roughly around 38 to 40%. So what is the reason for that? Is one of the order got cancelled or it has been deferred by the customer? What has happened over there?
कमलेश भाई जरा बताइए क्या आप पूछ रहे हो? There are something I don't understand.
Yeah. So last quarter, if I see Q3, there was roughly around 389 crore of order book which was from EMS. And at the end of Q4, I see 240 odd crore of order book based on the percentage which have been provided in the presentation. So that suggests roughly around 38% decline in your EMS order book.
And order book has not been declined. Basically, what this order was there last time, it has been dispatched the parts, goods, and net of is that today is 253 crore. There is nothing has been delayed and nothing has been cancelled to be there. It has been delivered.
Yeah, because if I see order intake, you have 636 crore and their EMS share is roughly around 2%. And on the sales side, on the order which has been accrued, like say the revenue which we have realized in this particular quarter, 50 crore and 3% over there. So if you do the math, like say 127 crore, 112 odd crore of new orders and 13 crore of sales booked. So nothing incremental or like say order intake and sale value is same. While your order book has dipped 240 crore and which was earlier quarter 389 crore. So I am referring from your presentation only.
Let me see that because Q3 નું આખું presentation છે ને જો you are referring the which slide on the presentation?
Sir, I am referring to your on Q4, for the Q4, your order book is on slide number 7.
Okay, I'm in, let's say, in slide number 7 of today's presentation.
Yeah. And if I see the 6th slide of Q3 FY24 last quarter, so it was 14%. Yeah, EMS was 12%, which has gone down to 7%.
ગયા વર્ષનો આપને? Yeah. You are referring to the last quarter 3?
Yeah, Q3. Yeah, quarter 3.
1 second, I'm just opening up that. 13% value છે. sir, that 13% of the quarter 3 order book was only 49 crores basically. Okay. So the total, that is what you are referring the slide. Okay.
Yeah.
Is 377 crores and 13%. Correct?
So 3,242 crore was your order book.
That is the total order book. Out of that 12%, is of the total.
Was EMS.
Correct.
Yeah, which has gone down to 7% in this quarter.
1 second. I will make a mess and we'll come back to you parallelly there. Okay?
No,
We'll take a question to be there, yeah. Because no orders has been cancelled and everything will be there. Okay?
Yeah. Okay. And secondly, sir, can you give us the number of machine saved data in this quarter? How much was the machine saved sold in this quarter?
Number of machines.
Yeah. For the quarter and last quarter and for the full year.
Yeah. One second, no, I'm parallel.
Yeah, no issue.
Yeah. Quarter no sales long. So in terms of a revenue breakup, मैं आपको दे रहा हूँ पहले. Let's say in this quarter my entry level product.
Yeah.
Okay. It's 2,200 million. Let's say 220 crores. That high end machine is close to 162 crores, and mid level machine is close to 669 crores.
Okay. And the number of machines, sir?
And Q3, let's say Q3 entry level product was 241, and the high end machine was 123. So this high end machine combination has increased from 123 to 162 crores.
Okay.
Okay. Yeah, and entry level, let's say in this quarter has been reduced from 241 to 220 crores to be there.
Okay.
So the growth are the numbers also I am going to give you exactly on the numbers of Q3 and Q4 to be there.
Yeah.
Until, let's say, the next question we can take it.
Yeah.
So, Kamlesh, I'll give you the both the numbers.
Sure, sir. And sir, lastly, your other expenditure, that has in fact fallen year over year as well as quarter over quarter. So around 29 crore vis-a-vis 32 crore, same quarter last year. And on last quarter it was 43 crore. Despite the fact that in quarter 4 you had a higher revenue quarter over quarter, despite that your other expenses have fallen very sharply, both on quarter over quarter as well as year over year. So any provision write back has been there, or what has gone into that?
Yeah. So I'll give you a quarter on quarter.
Yeah.
Let's say my employee cost, okay, on a quarter 3 to quarter 4, okay. Let's say in quarter 3 it was 55 crores and quarter 4 is close to 56 crores, okay. Finance cost has reduced there, and depreciation and amortization also has little bit reduced, and other expenditure has reduced from 43 crores to 28 crores there. See, basically in a quarter 3, we have whatever the exhibition we have participated over there, that cost has come. It is not coming every quarter to be there.
So you are saying it's more related to exhibition costs?
Yeah, more than exhibitions and marketing cost to be there. Rest everything is on a track there.
Okay. Great. And sir, just last suggestion, if you can provide, let's say, how many machines were sold for a quarter. So in presentation.
I'm just giving you
in presentation as well. So that would be very helpful.
Yeah.
Great, sir. Thank you, sir.
Yeah. Thank you. Thank you, Kamlesh sir.
Thank you, sir.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Yash from Stallion Assets. Please go ahead.
Hi, thank you for the opportunity. So I just wanted to understand what is the expected order inflow for FY25?
Order inflow, we are looking in order inflow, we are looking in terms of aerospace and defense alone, we are looking to be close to 1,500 crores there. Okay. Apart from that, there is a EMS, we are looking to be close to 500 crores. And rest, let's say another 500 to 700 crores. So 2,500 to 3,000 crores order book, we are looking to be in FY25 to be there.
Got it. So, and this is obviously on top of your order execution that will be there for 3,400 crores over the next 1.5 year, right?
Correct.
Correct. Got it. And so we've seen, some volatility in your EBITDA margin. So in Q4, we have 30% EBITDA margin. I mean, just for couple of years going ahead, what is the steady state EBITDA margin that you expect?
So basically, with this combination of the business in aerospace, defense, and now with this EMS, okay, and with this volume, let's say what EBITDA today we are able to reach to close to 25 to 27% is going to be sustainable. You can look at that.
Got it. Okay, that was it, sir. Thank you.
Thank you. The next question is from the line of Jigvir Singh from Shade Capital. Please go ahead.
Yeah, thanks for the opportunity. So, sir, we have a closed order book around 3,400 crores.
Correct.
So, in how much time it will be executed?
Is in 1.5 year.
Okay, so so any guidance for this FY25 EBITDA margin and revenue?
So you can consider, let's say, this order book has to be executed within a 1.5 year time.
Okay, and the EBITDA margin, sir?
EBITDA margin is little bit, we are improving from here, this level to furthermore. Once the execution has been increasing, EBITDA margin is little bit improvements are going to be seen in next coming days.
Okay. And so this is some long-term...
Largely this year we are going to execute this order book. And order book, there is a large order book on aerospace and defense. So EBITDA margin is going to be seen to be improvement in this year.
Okay, so then given the government focus on the manufacturing in India, so how do you see the next 3-4 years for the Jyoti CNC?
Yeah, so basically, if you look at that, the manufacturing is growing, and the way the machine tool consumptions are required, we are looking the entire consumptions are going to be a 20 to 25% CAGR over here. So that's let's say India today is close to $3.3 billion of a consumption, and it is going to be a more than double in the next 3 to 4 years time. And there we have a great opportunities to be there. Because out of that, still 65% of the machines are being imports.
And sir, how do you see this opportunity in the export?
And right now, in aerospace and defense industries, mainly in Europe, we are exporting, and we are looking to be more export opportunities from that same zone to be there.
Okay. And sir, you are supplying to HAL and these customers, so they have a great order book. So I think it will be helpful for the Jyoti CNC also in the near term.
Yeah, we are in the near term we are looking to be very great business opportunities has already created, and in Indian different sectors, and even the government has given them a large budget to expand the capacity. Even all the ordnance factories, now the 8 companies are there. They also has come forward to investment over there. We already have a big pipe. We already filed the tenders and everything. once that everything will be open, we'll have a large order book in this year. That's already talked to under my desk speech there.
Is there any impact of new orders due to the elections?
No, we have not seen any effect to be there because it's all the defense, aerospace, and this all EMS customers. These are the all outside customers. They are not looking to be just election and kind of a things like that. It's just a daily our life to be there.
Okay, thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Pritesh Shah from Lucky Investments. Please go ahead.
Yeah, hello sir, this is Pritesh. Sir, hello sir. How many machines did you sell in FY24?
Just I'm calculating and come back to you on Kamlesh numbers also there.
Okay. So this 4,400 machine capacity would be fully utilized?
No. The total numbers I know that I'm just going to give you a third quarter. So total is 3,450 machines we have produced here.
Okay. And what is the progress on the Apple machine?
Pritesh, I cannot. We have a very tight contract, so I cannot leave a name. Okay, but we are already having a good state to be there.
Okay, and so lastly, this 90 crore interest expense which is there now, you have done your fundraise.
Yeah.
So how will this interest expense move?
So we are expecting close to 60 to 65 crores is going to be reduced.
Okay.
Yeah. We have already paid the debt.
Okay.
Yeah.
And what is the growth rate in the machine tool industry in FY24 in your opinion? Indian market would have grown?
We are just waiting the consolidated number, but it is crossed more than 23% there.
Okay. Thank you very much.
Yeah.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Thank you very much for the opportunity, sir. So, firstly, on the aerospace and defense, you mentioned that we would be receiving close to 1,500 crores of orders in financial year 25. So, sir, out of that, what would be booked in Huron and how much could be the inflow from Jyoti standalone perspective from the domestic market?
So, out of that, let's say everything is because of all the Huron product. So it is directly or indirectly it is connected to the Huron. But let's say you can say like that, the 50% is going to be manufactured over here and 50% has been manufactured there. Okay. So that executions are going to be like that. The order is a common pool to be there. Okay. You can say that India we are looking to be close to 1,000 crores to be there, and rest we are from other markets to be there.
Understood, sure. So what would be the order intake for Huron in the entire FY24?
So that I need to calculate because I have combined over here. But it is close to in FY24, it's close to 1,200 crores to be there.
Understood. Sure. So my second question is on the EMS. So could you explain what are the typical applications within EMS that we are right now catering to? And going ahead in the future, what would be the incremental applications that could come into the fold? So in nutshell, how the market is going to expand for us from the applications perspective?
Arsil, you are putting me in a little bit in trouble. Okay, so basically in the EMS industries,
this is not customer specific. In the broad perspective, general.
Okay. So broad perspective, let's say broadly, let's say mobile is one of the largest the machine consumer. Okay, and those companies, those who are making the mobile on a metal bodies. Okay, so outer body is in part is to be a metal cutting completely. Plus backside glass and everything also is fully machine over there. In a mobile, there is a around 66 components are required to be machining over there. Then there is a tablet. So tablet also is required to be a fully CNC machine, as well as watches. Now all digital, watches, electronic watches, is also as completely made as from the CNC machines to be there. Even the keyboard, even now the metal body of a laptop, and all these started manufacturing over here. So this is how the opportunities are like that.
Understood. Thank you very much, sir, for taking my questions.
Yeah.
Thank you. The next question is from the line of Sampath Naik from Tiger Asset. Please go ahead.
Hi, my question has been answered. Thank you.
Thank you. The next question is from the line of Darshan Patel, an individual investor. Please go ahead.
Sir, my questions have already been answered. Thank you so much.
Thank you. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yes, sir. Just one question on the part of your aerospace and defense. So, like largely, Makino and DMG are big machine suppliers there. And on the cost front, like say, no doubt they are much costlier. But like if we see these players, like they have a large orders from all their global, like say GE and all these big players. So how does it make sense, or how are we actually making a sense for the customer to buy the machine from us? And the major part is that in the case of all these big MNC CNC manufacturers, there the resale value is also very strong there. So how are we pushing our products given the stiff competition from the global CNC players?
Yeah, thank you very much for a nice question there. See, basically, I'll tell you this Makino, the Morisaki, Mozart are these Japanese manufacturer. There is one company called the DMG also to be there. Okay, and let's say Huron, and we are in aerospace and defense because of the Huron subsidiary, and now subsequently we are making over here. So Huron was always to be a very high precision and unique machine manufacturer. Okay, the earlier part, before let's say 3 years back or 4 years back, Huron was always to be making the very unique application for the aerospace and defense industries, and the machine prices was always even higher than the Makino and the Mozart to be there. And customers are ready to pay there in Europe because they are producing very precision and unique machines to be there. Okay? And that's why Huron always, let's say, very specific the product they were serving. And largely that all this kind of a high precision machine was not required to these customers. So numbers was not increasing. Over a period after the Jyoti started manufacturing all this back-to-back manufacturing in India and supplying this component and sub-assemblies and now fully machined to those customers. So we are able to compete. Earlier we were having always to be 20-25% was a higher price. Now we are able to compete them, and people are ready still to pay of a Huron brand and the product over there. They are able to pay us around 5% higher there. And that's why we are able to increase our order book on the same clientele over there, basically. Okay. Hope you can understand that.
Yeah, but sir, in aerospace and defense, how much would be your, like say, the machines going to the PSUs? How large is your PSU customer base?
Let's say in aerospace and defense, we have a large customers in Europe like General Electric, the Airbus, the MBDA. In China, we have a customer called as AVIC. Okay, and globally we have a many customers. In India, we have a Tata Advanced Systems, and in all Indian PSUs like all ordnance factories, the HAL, and then ISRO, Bharat Dynamics. Those are our customers earlier.
Yes, sir. Good. Thanks a lot.
Thank you. The next question is from the line of Dipesh Kashyap from Invesco Mutual Fund. Please go ahead.
Yeah, hi, Jayesh sir. Thank you for taking my question.
Hi, Dipesh ji. How are you?
Very good, sir. Very good. Sir, sorry, I joined late, so sorry if it is a repetition, but just want to understand the muted top line growth in the Indian entity, the standalone. Is it just a timing issue or something is there? If you can just highlight that.
What do you ask?
I'm saying in the Q4 in the standalone entity, that is your Indian entity, the top line growth was not there, right? It's actually a decline. So was it just a timing issue that the delay in the dispatch of machines, or how to look at it?
No. So basically, you know that because we were always talking to be on the larger machines, capacity constraint was there. Okay, that's why our assembly we have started. And because of this large high-end machine, we have executed because of the force of the customers was there, and the assembly was a bottleneck over there. So there are a number of machines, and the top line has been not increased over here. But the margin we could able to do a better because of this high-end machine has been executed on a Q4 to be there. And that is been now over here. Our next assembly is constructed and it comes to assembly stage over there. So coming forward, we will not see this bottleneck to be there.
Understood, sir. Secondly, sir, on taxation part, I just want to understand that I see that in your standalone entity, you are paying full tax rate, right? And in your subsidiary, there might be no tax because of the accumulated losses that you have. So how in the next year, how should we look at the execution and how should we look at the tax rate that you will see on the consolidated basis?
So basically, we have a tax losses, carry forward tax losses available at Huron level is close to 90 crores. Okay.
Okay.
That is that we can, and in France there is a rules like that. We have a 1 million euro after the profit is completely tax free, and then let's say we have made a 5 million euro as a profit. So 1 million is there is no tax, and then after 4 million, 50% is goes off, and let's say another let's say 2 million euro we have to pay 25% of tax. So kind of a calculations like that. So combinedly, we can look at that as close to 20% we will come.
In FY25?
In FY25.
Understood. And lastly, you gave that the new order that you're expecting this year, right? So I just want to understand how much is going to be Huron. And when you say that your HAL, ISRO and all those orders are coming, how much basically it is going to Indian entity versus Huron? Because why I ask this question is because you are increasing the employee count also in France, right? And I just want to understand what is the new orders that are coming to support that increase that you're doing in France.
So basically, this year we are expecting of a full year, we are expecting from 1,500 to 2,000 crores orders from a Huron side. Let's say Huron side means that is a 5-axis and large machines. Okay. Machine being manufactured in Indian factory also, and machine is being manufactured at France also there now. Okay. And this year we are expecting close to a 50 to 55 million euro execution are going to be from that. And our customers' needs are very more machines, so more machines are going to produce in India and going to supply to them.
Okay, so it will be booked as a Huron only. So execution will be done by Huron.
Yes.
Got it. And lastly, sir, the inventory days, right? That you have done a good work. It has come down as you have been highlighting. But how much more improvement can we see as the sales ramp up, sir?
Yeah, thank you, Dipesh. So as we have discussed earlier also, once the sales is increasing, inventory is being optimizing there. Let's say today our inventory days has come down from 320 to 325 to 236 days. And we are expecting to be a 160 to 170 days in between in FY25.
Great, sir. Great. Thank you very much, sir, and all the best.
Thank you.
Thank you. The next follow-up question is from the line of Yash from Stallion Asset. Please go ahead.
Thanks again for the opportunity, sir. Just one question. So out of the 2,500 to 3,000 crores of order inflow that you're expecting in FY25, how much would be the execution on that? Like how much would we be able to convert to revenue broadly?
Let's say this, I can say like that, that next 1.5 year with existing order book, we are going to be executed to be there.
No. So I understand that, but I'm just saying that from my understanding. So if you get like let's say 1,500 crore order of aerospace and defense, how much time does that normally take? Is it like a year or it just depends on specific products there?
It's mainly this manufacturing time is more than a year, so it's a 1.5 to 2 years there.
Okay. Broadly, so it's 1.5 to 2 years. Got it. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I will now like to hand the conference over to the management for closing comments. Over to you, sir.
Kamlesh ji, there was one answer was pending from my side. Let's say so there is a 797 is close to 800 machines was been delivered in Q3, and 991 is close to, let's say, 1,000 machine has been delivered on Q4, and total number of machine has reached to 3,495 to be there. Okay, and let's say thank you very much to all of you over here. And thank you for participating into this call to every one of you here, each of you here. And have a wonderful year to go ahead there. Thank you very much.
Thank you. On behalf of Equirus Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.